Hello everyone, let me introduce myself. My name is Izaza Hozalianti. I am from the Sharia Accounting Study Program. To fulfill the English course assignment, here I will introduce 100 words about financial report. Firstly, accounting is the art of recording, classifying, and presenting financial information in monetary terms. Balance sheet is a report that describes the financial condition of a business at a certain time. Fixed asset, namely physical assets that have a lifespan of more than 1 year. Long term. The general ledger is the main record used to group transactions that occur in a company based on account types such as cash, receivable, payable, income, or expenses. Gross profit is the profit a company earns after deducting costs related to the production process, sales, or provision of services. Net income, which is the total income of a company or individual. Cash flow, the movement of incoming money that show real or cash activity. A financial statement can be interpreted as a record of a company activities carries out over a certain period of time. Account receivable are transaction records that serve as a reference for a company. Wage expense is the cost incurred by an organization to pay employee compensation. Cost accounting is an internal business practice of identifying, measuring, tracking, and analyzing. Bank reconciliation is an accounting process to match a company's financial transaction records. Profit and loss statement is a financial report that presents information on income, expense, and net profit or loss generated by a company in a certain time period. Sales tax is a consumption tax imposed on retail sales of goods and services is a sales tax. A trial balance is a report listing a business, general ledger accounts, and their debit or credit balance at a specific point in time. Revenue is the total amount of money a business earns from its main operation, such as selling goods or service, before any costs or expense are deducted. A statement of cash flow is a financial report summarizing a company's cash flow and outflows during a specific period. Account balance is the net amount of money in a financial account at a specific time. Notes to financial statement are supplemental explanation attached to a company's main financial statement. A petty cash fund is a small reserve of a physical cash kept by a business or department to cover minimum. The quick ratio is a financial metric that measures a company's ability to pay its short-term obligation using its most liquid asset. A real account is an accounting account for assets, liabilities, and equity that is not closed at the end of accounting period. Residual value is the estimated worth of an asset at the end of its useful life or alleged term, representing the amount it can be sold for after depreciation or disposal. Receivable is the right to claim payment from a customer for good or service delivered on credit. Public accounting involves a public accountant or firm providing audit, tax, and consulting services to a range of clients, including business and individuals. Operating budget is a detailed financial plan that projects a company's expected revenues and recurring expense for a specific period, typically a fiscal year or quarter. Depreciation is the reduction in the value or utility of an asset over time due to usage, age, wear and tear, or obsolescence. Financial literacy is the ability to understand, manage, and effectively apply various financial skills and concepts to make informed financial decisions, including budgeting, saving, investing, managing debt, and protecting assets. Fund balance is an accounting term for a governmental entity's surplus, representing the excess of assets over liabilities, and it serves as a measure of available financial resource that can be used in future years. Petty cash is a small reserve for physical money kept by a business to pay for minor. Subsidiary ledger is a detailed accounting record that breaks down and supports summary amounts in a company's general ledger. Trade discount is a reduction from the list price of goods or services offered from a manufacturer or wholesales to a business customer such as a retail or wholesaler. Working capital is a financial metric representing a company's short-term liquidity calculated as current asset minus current liabilities. Net pay, also known as take-home pay, is the amount of money an employer receives after all mandatory and voluntary deductions have been subtracted from their gross earnings. Journalizing is the first step in the accounting cycle where financial transactions are recorded in chronological order in an accounting journal, also known as the Book of Original Entry. Deferral is the postponement or putting off of an event, or in accounting, the delay in recognizing a revenue or expense until a later accounting period, aligning with the matching principle of financial reporting. Current assets are a company's liquid resource like cash, account receivable, and inventory that can be converted into cash or used up within 1 year or one operating cycle. Book value is the total asset of a company minus its total liabilities, representing the theoretical net worth of the company if it were liquidated and is found on a company's balance sheet. The accounting cycle is a systematic, step-by-step process that business use to identify, record, and report financial transactions over a specific period, culminating in financial statements and the closing of the books for that period. Tax credit is a dollar-for-dollar amount taxpayer claims on their tax return to reduce in the income tax they owe. An expense is the cost or outflow of money and other assets required to obtain goods or services or to operate a business and generate revenue. Account payable is the total amount of money a company owes to its suppliers or vendors for goods or services purchased on credit but not yet paid for. Intangible asset is a resource of a business or entity that lacks physical substance but holds long-term financial value. An audit trail is a detailed chronological record that documents the sequence of events, user action, and data change within a system, serving as an evidence-based history of a specific transaction or operation. A yearly report, also known as an annual report, is a comprehensive document a company publishes to summarize its activities, performance, and financial status over the past year. Depreciation expense is the systematic allocation of a tangible asset cost over its useful life to reflect its gradual reduction in value due to wear, tear, or obsolescence. Carry forward is the practice of moving an unused balance, benefit, or credit from one period to another, such as unused vacation days, budget allocation, or tax-deductible loss to be used in a subsequent time period. Payroll is the system for a business to pay its employees, encompassing the accurate calculation of wages and salaries, deduction of tax and other contributions, and the timely distribution of net pay to employees. Selling expenses are the costs a business incurs to market, promote, sell, and deliver its product or services to customers. An enterprise fund is a municipal accounting mechanism that tracks services like water or public transportation that are primarily self-supported by user charge, similar to a private business.
Saatnya sudah